Good afternoon, everyone. This is another scenario wherein we are actually faced with a new 78-day high, but this one has a kind of a candle formation, which is taking the form of a rickshaw. A rickshaw is kind of like this. It looks like having a long tail, a long wick, okay, with a small body. And that's what a rickshaw is like a guy riding a bicycle and then like looking at him right at the very top. So this is like the top view of a guy riding a bicycle. That's a rickshaw. Okay, so it looks like this here. And I this one is called LIQT, LIQT International Incorporated. Now, as you can see, if we are going to take a look, this one tried to break out the 200 EMA, which is the blue line here. This is our 200 EMA. It was trying to break out the 200 EMA, and then it created a new high here. So let's call this one as H1. Okay. But then it wasn't able to sustain. It came back, pulling back right onto the 200 EMA, but then it broke down. Although it found a support right where the rest of the other bottom also lies. Then again, it broke out of the 200 EMA. Then upon breaking out of this 200 EMA, it created the candle formation, a rickshaw candle formation. And if you take a look, it had also broken the H1, which is the previous high. So forming a new 78. So this is our new 78 here. Now, with this kind of formation, how do we trade if in case we see some kind of a formation like this? First and foremost, we have to make sure that it follows your rules. So this is the reading that we have. First, it should have broken the 200 SMA or 200 EMA, the same, and created an H1. The price broke down the 200 SMA or EMA right here. Okay, it broke down. But then it created again a breaking out of the previous high. So this is the rickshaw formation. Now, I placed here enter after the breakout of the rickshaw's low on good volume. So we are going to wait until it is going to prove itself that, the low, which is around 168, 170. So the low is going to be supported. Now, how do we know that that would be our support? This is what I usually do. So I have here the highest volume, which is around 12.9 million. Okay. Now, if you try to take a look, previously, it made also a highest volume around 1.6 million. So this is the previous volume. Now, the funny thing with this with stocks is that where the biggest volume is, or with previous volume, that is where it's going to pull back, and then it's going to find its support. Now let's try to find out. So if we trace this volume, last November 14 of 2018, we have this candle. Okay, so this candle here, what I'm going to do, I will use this candle. Let me try to change the color of that one so that way. Oops. There you go. Okay, so we will know that that would be the the price line of this particular volume. So that is the close. This is the breakout. This is also a breakout. This is the breakout close of that particular volume. And we'll use that one as our support. This was the highest volume. Let's say that is our current volume when we saw this rickshaw candle. We try to trace back the previous volume, which is the highest volume. So from 12.9, we look at the volume at around 1.8, 1.725, something like that. Okay, and then tracing that volume, we have the candle, and we use the close of that breakout candle as our support line. Now let's try to see what's happening with this. Okay, I'm trying to move. There you go. There's a pullback. Now it created how do you call it, a doji right on top of the EMA, 200 EMA, and then a hammer. Boom, and there is a heavy sale. Based on my experience, if you are going to find a candle with a very long wick, what's going to happen is that the bull is going to take out the top of that wick. Okay, but of course it will find some resistance, and this is a resistance. So, but if you notice, yeah, there's a huge red candle with a small volume. So something is not right, right? Okay. Here we go. Again, it's going, oops, and it dropped down. It dropped down just right below our green line, which is the support line, which is the close of the previous volume that we actually traced. Boom. Again, is it not scaring? Is it? It is actually scaring most of the small time investor. But this volume here tells me that huge buyer are actually coming in. But of course, this huge buyer they're not going to buy also like on a high price. They, like I always ask from everyone, if you are a billionaire, what would you do? Are you going to buy at a high price, or are you going to wait until you have the right price that you would like to put your money in? And most of the answer is, yeah, wait for the right pullback, get the right price. This big guys, they can always wait. They have all the time in the world because they have all the money. Okay, so look what's happening. Boom, boom. This one, two, three, four, five. That is just scaring away the people. The market maker is trying to. The market maker knew that there are big buyers coming in. So the only way the market maker is to be able to accommodate these big buyers is to drop the price down. By dropping the price down, he would be able to scare those people who are holding their shares, and they are weak hands. These weak hands, once they see something, something, let's say dropping or what with the price, they get scared. As soon as they get scared, boom, they sell out all their position, and now all the shares are going to be open to the big buyers. Let's see. At 165 is holding on at 165. Boom. And another scare. Boom. Okay. There you go. And it's slowly coming up. And there's just a slight volume, but that's actually a huge volume against this previous volume to scare people away, right? So buyer, the big buyer is starting to actually put down cash, so that way they can position more shares. There you go. Oops. 220 and up and up. 288 is going to take out that. What is the price line of this one? 333. That's the price line of the top of our wick. Okay. Okay. And remember, most of the resistance that you could find, especially when you are going to trade, are the whole number resistance. This can also be the support. But if the price is actually going up, like for example here, $3 is the whole number resistance. So that would be the case. There is a strong resistance at $3. So you could always expect that this particular price is going to pull back. And indeed, it pulled back to 261. And let's see, let's continue. Boom. Oops, 288. Okay, it's forming now the handle of the cup. So you have the cup here, and this is the handle. Yeah, cup and handle. There you go. Wait, wait. And a breakout. Small volume breakout. But this means, see, like I said, it had taken out the previous high that was created on the new 78. Had you ever positioned yourself either on the neckline or right at the tip of this tail of this rickshaw, then you would be able to gain much already. Or if you waited for that particular, say, if you use the previous volume and then you created a support line right at the close of that breakout candle on the previous volume, boom, imagine putting in your money at 159, hitting on 348, 350, that's a huge return. And let's go, continue. Indeed, it's going to go up and more, up to $7. Amazing. This is amazing. Okay, let's see where it's going to go and end. Oh, there's a huge pullback. But had you ever cashed out already here at around $5, you're good. You can run with your money. And right now, this is basically just going back and forth right on, what's this orange line? The EMA 50. SMA 50 is creating again another cup. A handle. And there you go. What do we have here? It had gone as high as $10, entering at well, what was the price that we have? 168, 160. My goodness, going to $10. Huge return. Huge return. Okay, so how do we handle again if we have this kind of formation, a new 78-day high with a rickshaw candle formation? So you have to make sure that first and foremost, let me go back here. There is a breakout of the 200 SMA or 200 EMA. Okay, so this is our blue line, which is our 200. So this one had broken. This one was trying to break out, but it wasn't able to break out. But it was followed like 1, 2, 3, 4. On the fourth day, there was a breakout. It created an H1 high. Okay, this is just my reference point. So you can create a different marker right there. So that is my marker. Okay, highest or high one. So it created a high one. And then it wasn't able to sustain, it broke down. But of course, previous low becomes a support. Use candle, use volume here. There you go. And it was the low of that highest volume where it found a support. And a good breakout of the huge volume. And you have an N78, N78 breaking out from a previous H1. So this is how you are going to handle whenever you have a new 70-day high with a rickshaw candle formation. Use the volume analysis, high 1, high 2, and all this breakout.
Jerome, here, sorry I'm late.
Hey man, how are you?
I'm doing very well.
Yeah, what's up?
Yeah, it was 10 minutes to 2. Somebody knocked on my door. And I said, okay, yeah, I have 10 minutes. And he drag and talk. I said, I have a meeting, drag and.
Oh, okay. Yeah, I was trying to actually explain here how are you going to handle a new 78-day high having a rickshaw candle formation.
Doctor is present.
So
is doctor around today?
I haven't heard from him. I don't know. Maybe he's in a meeting or what.
Okay.
Yeah.
Okay. So if it is 2 of us, okay. So
yeah,
it was recorded.
Yes, I did.
Okay, good.
Okay, hold on here. Okay, so do you have your stock fetcher?
I have.
Okay, but anyway, just look at what I am sharing right now, just to give you an idea.
Okay.
Because there are many formation that you could find on a particular new 78-day high. It's just that these are some of those winning formation.
Okay.
Winning formation have, let's say, for example, having a breakout with a huge volume. So here, if you look at it, we have a huge volume. Imagine the previous volume was like as low as 600 to like 500, okay, 500,000 shares. Then boom, it went to 12.9 million shares. That's impressive volume, right? So yes, somebody with a huge pocket is very interested with this stuff. But then, if you come to take a look, it got sold out. Well, you know,
is it the meaning of sold out?
Yeah, it got sold out. Look, it has a very long wick. That say from 3, it went as high as 333 just on that day. Okay, it opened at 191, and then went as high as 333, came back down, went as low as 167, and then it closed at 191. So it opened at 194, it closed at 192, something like that. So 2 cents difference. Look, the body is too small, the wick is too long, the tail is also long compared to the body, right? Very unusual. We call this one a rickshaw candle. Rickshaw, if you look at the on the top, take this one as like a top view of a man doing a bicycle. Okay, so it's like you have the head of the guy here, and then this is the bicycle.
Okay.
Okay, that's a rickshaw. Now there are there are key elements that you need to know of this particular breakout. Number one, you have to make sure that the price had broken from the 200 SMA or 200 EMA. So we have here the blue line, this blue curve here, that's your 200. Okay.
Okay.
Now, the previous volume around November 14 of 2018, it tried to break out, but it wasn't able. Basically, it was just touching it. Then 1, 2, 3, 4. On the fourth day, boom, it broke out with just a small volume. And it created a new high here. Okay? New high around December 28th of 2018. But it wasn't able to sustain. This whole thing here just went dropping down again. But it was being supported on the low of this previous high volume. This previous high volume is 1.8 million shares, right? So this is the low here, and it was being this is the one that supports. So it went back down below the 200 EMA, but then came back up, and a huge volume breakout, huge candle breakout with a rickshaw candle formation. How do you handle this thing? How would you enter into a trade if you come across something like this?
I would not even buy it.
Huh?
I would not even buy it.
You won't even buy. Oh, because of the first rule that I told you that, okay. But what I'm saying is that, let's say you had gained experience already, okay, and you can be capable of being able to get in and out without any hard feelings for the stock. Okay. So this is how you are going to handle.
Okay.
Remember the one that I told you before. When you have high volume, always look back to the left side and find the previous highest volume too.
Okay.
Okay, so this one, the previous high volume is 1.7 million shares, right?
Yes.
While this one is 12.8 million shares. Now, what we are going to do, we will trace where is the candle of that volume, previous volume, and then we'll try to use the close of that candle as a support line. Okay?
Okay.
We'll project a support line. This green line, we'll use that one as our support line. Okay. And you just have to be patient. And based on my experience, if you have a candle formation with a huge volume like this, the tendency is the buyers are going to eat up again this whole thing and even break out this previous high here. It's just that it's just a matter of time. Usually it will try to consolidate a little bit downward. If there is a gap, it will close that gap. Because there is no gap, it will try to go and close this this low or find the previous volume and use that one as a support. Okay, let's try to take a look and move forward. Okay, now you have, what kind of candle is that?
That small T something.
A doji.
What's the difference between a rickshaw and doji?
Yeah, right after the rickshaw is a doji.
Okay.
A cross. A cross is a doji. Mm. So the doji is just sitting right up top the 200 EMA. Okay, so it means the 200 EMA is supporting it. Boom. And indeed, went back to 206. But be patient. Don't pull the trigger right away. and it went to 250, but it had received a high resistance. Now, mind you, most of the resistance are the whole number resistance. When a price hits $2, it will get a good resistance. When a price hits 250, it will get a good resistance. When a price hits $3, it will also uh, hit a good resistance. So now it hits 2 and 250 right away. Then you will be sure that there is a resistance on that one. And indeed, yes, there was a resistance. It came back. So it tried to break out the H1 here, but then it wasn't able to sustain. 191, 196, it went down $2, 183, and back to 173. Boom. There is a gap down. A gap down with a huge, well, not really huge volume, but at least huge compared to the previous 10
Volume.
days,
Yes.
right? And there is a gap down. But have you noticed there a huge volume with a small candle? What does it tell you?
If I remember correctly, was you were telling me that if I see something like that, we call anomaly. That's the market makers are trying
Very
to.
good, very good. Oh, perfect, man. I love you. Okay, so it's true. There is an anomaly. Now, remember when I told you if you are a billionaire,
If I will
if
buy,
you are a billionaire, you got lots of money, are
mm,
you going to buy a certain, how do you call this stock, at a higher price or at a lower price?
the lowest.
The lowest price as much as possible. Now, have you noticed that this 12.8 million shares, that is a volume that almost everyone could see, especially the market maker,
Hmm.
right? Now, if you are the market maker, how would you do it that in such a way that, okay, shit, I have a big buyer here. Now, what am I going to do such that I can give more shares to this big buyer because I know for sure this big buyer is going to position a lot, right?
Hmm.
So if I am a market maker and I can control the price, what I'm going to do is drop down the price.
Hmm.
By dropping down the price, those people with a weaker hands, okay, the small time investor, they
Hmm.
get scared. Once they get scared, they'll withdraw with their position
And said they said,
and sell their position. Therefore, now I can get all those shares coming from those weaker hands. And now I can use all this quantity to give to this huge buyer,
hmm,
right?
yes.
So it's like, yeah, what am I going to do? I am the owner of the tree. I'm going to shake up the tree so that all these apples comes down. And looks what's happening. That drop down can be a good scare. And yes, indeed. Boom. But how after a few days came back up. 1, 2, 3, 4, 5, 6, 7. On the seventh day, yeah, it went back on top. Still going, it's still dropping, but then look, somebody is trying to buy slowly, slowly, slowly. Boom! There you go. Now there's a huge volume here compared to the previous 10 days of volume, 700,000 thousand shares. And it's back to 1.188, 220. And what did I tell? Oh, okay. What did I tell you about the previous volume? We use this green line as our
Support.
support. Look at what happened. Go free. Had you bought at this close, at the close of this candle,
Mm-hmm.
and then just let it go, hang it there. So it means buying at 160. Look, you made money by hitting 225. You made money hitting at 250. You made money hitting at 288. Another money 275, 296. And like I said, $3 is a whole number of resistance. What's going to happen? It's going to pull back. But like this one, this wave here, these are actually those big guys slowly buying. And there you go. It's creating a cup, and then this one is the handle. The cup, the handle. Boom. Oops. Another scare, but don't worry, it's being supported. And a breakout of the $3. Look, what did I tell you? It's going to break out from the top of the previous week. This was the week.
Okay.
A breakout. Now we are what? 420. You entered at 160. Look what's happening. Boom. $6. $7. Could you imagine that? 744. Okay, again, oops, another scare. But had you ever taken your money out of $5 and $6? You're good. You're a happy camper. 750. $10. So that's how you are going to hand. Oh, this one here is another cup, and then another handle, cup and handle. It's a longer. This one you need a longer time frame. But if you are just going to ride on the new 78 day high, so you just have to be patient with this one. And like I said, in order for you to be able to enter on this, you have to trace the previous volume. But in order for you to be able to trade this one correctly, you have to make sure that all this criteria, okay, all this criteria that I placed here should also be checked. A breakout on the 200 SMA, and yes, indeed, there was a breakout on 200 SMA right here, and then it created a new high, which is the H1, and then it broke down with the 200 SMA or 200 EMA, but then it re-entered back with a huge volume. So this one, this is your clue here. So enter, new high, breakdown, again, a breakout, a new breakout against new high, a previous high. Now you just have to be patient, trace out the previous volume, create a support line coming from the close of the candle where you have the previous volume. Or if you have the guts also to wait for a little while, you wait until there is a breakout of the neckline. So if this is the neckline of your rickshaw candle, you can use that one. So a breakout on this one here, that is also your entry. So you can enter here. And it's a little bit higher, but here you have more leeway. And although you're not sure also that it might also, if it's going to go below let's say this is your, okay, let's say if you created this one, 150 becomes a real support here. Let's say if it drops down below 150, get out.
Okay.
All right. Do you have a stock you have in mind?
Yeah, I would like to show you the HG something that we did. I actually received a text message this morning.
Sorry?
I actually received a text message this morning about a pullback.
You had a pullback?
Remember the HG something that we were buying. Let me open my stuff.
Okay. And were you able to buy on that one? No.
It's not yet. We think we're waiting for it at 9:50.
Okay. This is GYNT?
Now it's 11:50 right now. New watch.
Are we talking on JYNT?
No, yeah, let me show you. It is called HYGS.
Okay. HYGS. Oh, I think you got a gym here. Okay, huge candle. Look, it tried to break out the 200 and then created an H1 here. And then it got supported. It didn't break down the 200. So then H1, a breakout of H1. So this is actually your entry point here. Although you can also use, yeah. $11.16. What's the report on this one?
And the report says HGSY falls below or equal to 1150.
Okay. No,
The one we said in HG will pull back hitting at 11.
I want you to, okay, let me show you something here.
So I think the actual buy was at 950. Let me check the question. I think the buy was at 950.
I want you to be familiar with this Edgar. Edgar or sec.gov. Just type sec.gov. This Edgar filing.
Okay.
So this is what you can find. Then all you have to do is just click company filings.
Yeah.
And then on the ticker, so you type HYGS. Search.
Filings.
6K. Oh, so this is a foreign company. Industrial Inorganic Chemicals. March 19, 40F. Where was that March 19? March. Okay, here we go. No. 40F. So You open this 40F, new tab. We want to know what's going on with this. Hydrogenics Corporation. Okay. Certification. Long-term debt. 10 million.
When I open the ECA, it says no matching companies.
No matching content?
Company. So I went to filings. I select the company file.
You have to type HYGS, right? And then click search on the fast search.
On the fast search, okay.
Yeah, on the fast search.
Okay.
On the company name, you cannot type the stock symbol. You have to type the real name of the company.
Oh, okay.
So that's why you use the fast search.
Okay.
Using the fast search, all you have to do is just type in the ticker symbol.
Okay. Mississauga. So I click on the 40F.
40F. And then usually form 40F. 40-F. Okay. Capital. They want to see statements. Financial statements of year ended December 31st of 2018 and 2017. 99.1. Okay, so this financial filing. There you go. Okay, asset, cash, and okay, liabilities, revenue. This is what I'm looking for. Revenue. 2018, it's got 33 million against 48 million against 2017. So lowered revenue. The cost of sales is 25 million. So it means it has a lower cost 2018, higher cost in 2017. So probably because they were able to establish already with suppliers. Gross profit 8 million, 2017 11 million. So bigger loss. 8 million on 2017, 10 million on 2018. Net loss for the year 13, 10. So it means the average number of common shares loss balance 2018. Now this is for the share, okay. So this is just a repetition. So a 3 million difference. So it means they have more, they have 3 million loss, higher on losses 2018 against 2017. And they use more cash. Okay, here, the cash provided by use in investing activities. Before they have negative, now they have 548 cash, 548,000 cash provided by use in financing activities. They have positive here, they have negative now, increase. So end of the year cash, They have only 7 million. They have 21 million previous year. Okay. There must be a catalyst why there is a sudden interest. Because the revenue, let's try to, did you look at Finviz?
I look at it. I think there's a news they said about it.
What's the target?
What do you mean by target?
Finviz will always have a target.
Oh, okay.
Snapshot. Target is 960. Target is 960. Market sentiment around loss-making hydrogenic corporation. See, a loss-making hydrogenic corporation. Q1 loss, lags revenue estimates, 1Q earnings snapshots. Okay, there is what we call trap. There is also what we call traps. See this one here.
I see. I see.
EPS QQ, there's nothing. Sales quarter per quarter is also nothing. Zero. Right?
Yeah.
Why would a stock be rising? You have to question that one, right?
Yes.
Why would a stock be rising? Would this be a trap?
Could be.
That maybe they would like to, some of these guys would like to exit? Or there is also another reason. There could be a reason is that it could be a trap that this one is just going to go down. The people will, they're trying to get the sentiment of the people. Oh, okay, seeing this one, we'll put the money in. Then all of a sudden, all this money is going to be suckered. So, and there's another reason also. If, for example, a stock is going to go up, somebody is interested to buy the company.
Okay.
All right. Now, if that could be the reason, there is a huge tendency also that this 1172 could even just propel higher because somebody is interested. And usually, a company that is being bought out, usually the stock price would go high. Because of course, when they sell, they're not going to sell it like cheaper. They'll always sell it higher. So we need to go, because here all the reports Q1 loss, and then it doesn't make sense, right?
Yes.
So
wait for me.
So there is a good reference. This is a good reference for a big possibility that maybe somebody is interested on buying the company.
Okay.
But basically, the reason why it's up right now is the technical formation. That it had broken the 200 SMA. It is being supported by the 200 SMA. I would wait until the price touches back to 50 SMA before I'm going to touch this.
Okay.
If it touches the 50 SMA and it's being supported there, okay, then you can put your money in. But for now, you might get hammered on this one if it's just going to be a trap. And your first how do you call this, trigger had been hit.
Yes, by going down to
Okay.
1150. So let me see what is the next one. I'm opening it right now.
Yes.
So
Check it out.
you want me to take? You say I can take the money out?
You're not putting any shares yet, right?
No, we set it up. I set it up like to execute when it goes down to certain. Let me see what is orders. Oh, it was 1050. We were to buy it at 1050.
1050. Okay, let me check. What do you have at 1050? 1050. Oh, 1050, because that is the previous volume. Remember, previous volume, the close of the previous volume is 1050, right? Your previous volume is what? 239,000 shares, right? 239,000 shares at 1050. Yeah, that's why 1050 is the close of that candle on May 20. Yeah, May 28.
Okay, if I want to cancel it, where do I cancel it? Or I can even reduce the price to 950.
You reduce to 950?
I'm saying, let me double click. Oh, okay. It's allowing me to double click. Maybe let me.
You can buy just a small quantity just to test to test it, right?
Okay.
So that if it's going to prove that it's going to go down continuously, then okay, dump it. If it's going to go up, okay, then in that case, now you can probably add more shares.
So maybe I cannot change anything right now. Should I? Until I cancel the order, right?
Oh, you cannot edit the order.
Yeah, that's what I'm saying. Maybe let me see.
Then if you cannot edit the order, you just have to cancel that order and then just create a new one.
Edit fuel price. No, I don't know how to do it. So let me just cancel it. They say cancel pending.
Oh, how come?
Yeah, I don't know. It doesn't just cancel right away. Should I share my screen?
Sure. Well, let me stop my share. Okay.
So when I click here, it gives me the option to cancel. So I click on cancel all orders. And it's come back here and says status is cancel pending.
So pending. Oh, we have to double check position. Click position. No position. Execution. No execution. Activity. Cancel. Okay. Okay. Do you know why it's pending?
No.
Because the market is closed.
Oh, okay.
The market is closed. So that one will get processed the next day.
Which is on Monday.
Correct.
Okay. Okay.
Yeah. And 1050 for 100 shares. Yeah, if you look at Finbiz is actually creating some sort of a channel, the upper channel and the lower channel.
And it's talking about 950.
No, not 950. The $12 right now is on the upper channel.
Okay, we're not going to Finbiz. I should go to.
Just click screener. Click screener.
Okay.
And then you type in HYGS. And then snapshot. Snapshot.
I saw that you clicked that before, but
Oh,
where's that?
the snapshot is right on one of the tab, like second to the last tab. No, down where the name is YGS, right?
Oh, yeah.
No, down. Oops.
So now see it here.
Right hand side. Okay, upper a little bit stats. There's stats on the left hand side. Snapshot. Okay, see the purple line is the upper channel. The blue line is the lower channel. So we would like to see a compensation of a pullback going to
8.
Yeah, not 8. Because you have a support at $9. It won't go to 8.
Okay.
So
what do they mean by lower and upper channel then?
Channel, a stock when it goes up, it always create an upper channel and a lower channel. Meaning, if you connect all the highs, all the highs would become an upper channel, and then if you connect all the lows, the lows that are going higher, that becomes also your lower channel. So here you have here your low, and then this higher low here. Connect that one, so that is your lower channel going upward. And then here you have a high point, then you have another high point here connecting that one, that is your upper channel. Okay. So this is your upper channel, this is your lower channel, and usually the price will go back and forth between that upper and lower channel. Okay, so there's another thing that you need to know, that once a stock usually will snake going upward, it will, just like the snake, it will try to do a curve. There's a high curve and then there's the lower curve, right? Yes. All the lower curve will constitute the lower channel. All the higher curves will constitute the upper channel.
Okay.
So, okay, what else? So for now, yeah,
So the next thing that I checked was stuff which
did you get this stock from your new 78-day high?
yes, and I even got one yesterday. This one, Emerson.
NAP is actually doing great.
I did not buy. I just put it on my watch.
NAP has a good revenue.
Okay, so I did this Emerson something. So I put it on my watch list. It broke the new 70 days high 2 days ago.
When did it happen that it got the new 78-day high?
I think 2 days ago. Let me confirm.
Before? Okay, let me check here. 4 days ago. One, two, three, four. Table. Understand. You sure? Okay. Let me double check here. MSAN. Okay, my Sonics. 146. The volume is 146,000 shares when it made a breakout.
So that was Tuesday.
Yes. Historical. Oh, this is flat line. I see. The new 78-day high. First one is when was that? July 23, 2018. Okay. This is interesting. What are you trying to do?
Oh, I'm checking the past something. The past highs. So this is 2 years. So let me do 1 year.
Okay.
So the previous high volume was, this was red. This is.
What I usually do, I put a marker on the stock. So remember what I told you before. You hit the shift key. Let's say, and then you put the cursor where you would like to have that label. So shift key and then click the left mouse button so that you can put a note, and then it creates a line, and then once the line is created, you just enter the new 78-day high, and then it's going to create some like that. So So just put N78, something like that. So you're good. And then I also put a label. Okay, click save. So it creates that line, right? And then that N. So you also hit that AB label.
Which one is that?
You know where you have all those the arrow, then the diagonal line, the vertical, horizontal line, and then you have the AB. You click AB, and then just click anywhere near that line. Okay, and then click, and then you type double click on that, click to edit, and then just replace that one with N78. So that way you will know right away that okay, this is where I mark it as new 78. Then the next time you open it, okay, you know exactly where.
Okay.
So if you look at it, it had broken the previous high of $22. Okay.
Yeah.
Now it made 20. It hits $25. You can use actually the tail of that red candle 2376, 2375 as your entry point. How come your candle is different?
Yeah, I suppose it doesn't say 20 something, it's right on mine say.
Yeah, yours is behind.
Oh, yeah, the 3 months, 6 months. Yeah. Oh, maybe I needed to
Close it.
Oh.
Yeah, you're looking on the wrong page. Okay, now expand that one. Say this is what what I'm talking about. It had broken the $22. So you create a long horizontal line right at 22.
Yeah.
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 Click that horizontal line. No, not vertical.
Oh, sorry, horizontal.
And then click on the 22. See? So one high, first high, second high. So there are actually two highs that had been broken there. Now it's reaching $25. So that is where your resistance at $25. And there's a hammer with a long tail. I would use that tail as my entry point.
The 2437. Okay, this one.
23, around 23, 2350, 2365, something like that.
Oh, this one.
Yeah. No. The red candle.
2345.
Yeah. Sometimes it might not hit that. It might hit only on the neckline or midsection of the tail. So that's why sometimes I'll place my order right on the midsection of the tail, not all the way down, because sometimes it
may not.
Yeah, it might not be hit.
Yeah.
2375 probably. This use a whole number.
Like 23. Like 23.
No, 20 like 2325, 2350, 2375, something like that.
Okay.
All those.
Okay. I would not even buy this one. I wanted to just show it to you.
Okay. And take a look. What does Finviz say also on that one? If Finviz, usually, sometimes Finviz is quite pretty good with the with their target though. So most of the time, if it's looking for a pullback, the pullback, so there's big probability the pullback goes right where 2350 is.
Wow, target price is $26.
How much?
26.
26. Oh, you're pretty close already to, yeah. See, look at the one, that purple line there, upper channel. It's closing into the upper channel. So when you are already at 25.50, you only have 50 cents. So you wait for the right pullback on this one. That's why I said this one, you can use the tail of that red candle as your entry.
Okay.
Because right now, see that upper channel, it means the high is already hit. Then all you have to do is wait until it pulls back. And that's what I usually do. I'll wait for a pullback, and that's where I'm going to enter.
Okay.
Or sometimes that's why I'll use all those tails as entry point. Or I will, let's say, if this for example, you have a long volume at 200,000. Next volume is what, 150,000. Where I will use where is that one? So probably the open, which is $23, might be the possible. But it seems that that red candle had already taken it. So now I'm gonna use a red candle as an entry point also.
Okay.
And take a look what's okay. What, can you scroll down a little bit? What does it say on the news? Masonics receives US FDA clearance for Nexus. Ah, okay, an FDA approval. FDA approval. When? June 3?
Yes.
Okay.
And that's when it hit. That's when it hit, and it's on 8 days high. I think that's Tuesday. Let's see, June 3.
June 3.
Okay, that was Monday.
You know, that was the right time supposed to enter when you receive that news FDA approval. And you just have to so right now it seems it's going to create some kind of a letter F. Remember the one that I told you, if it's creating that letter F? Yeah. And then like a breakout of that letter F, you can also use the one. If there's like a breakout on that letter F, okay, maybe position on that one. But I would say there might be just as this one could probably go up to 27 and before it pulls back to 23,
Okay.
2350. So and if you would like to ride
No,
27,
I will not buy it. I just like the explanation, and
okay.
I want something I will be able to control my emotions to see if I buy it at $12.
And then look at the report on sec.go, all the 10K. If it is supported, with a revenue increasing, you position in every dip. and then they have higher cash. So those are good elements that will back up the.
It would be 10Q or 8K.
Yeah, thank you. Yeah, just click the first document, the red one. The no. Thank you. You know,
This
yeah,
one.
yeah, the link. Click the link. Then just scroll down and look for the financial highlights. Okay.
Revenue.
Asset, liabilities. Okay. Deficit. Okay. The equity has gone down. Scroll down. Revenues. For the 9 months. Okay. Oh, look. Oh, there you go. For the 9 months ended 2018 against 2019, 29 million against 24 million. That's a good revenue.
Okay.
Then go for
Cash.
gross profit. Okay, the gross profit. Okay. No, wait. Net income. Net income. Oh, it's negative 5.8. Okay, now it's going down. The negative is going down, so it means the slowly it's making money. Okay, on the from 2018 to 2019.
Okay.
So from 5.8 to 5 million. So negative. So it means it's improving based on okay. It's, based on dilution of the stock 0.55 against 0.65. So that's good for the investor.
Yeah.
Scroll down. Okay. Cash. What do they have for cash? We know already the net loss. Okay. No cash. Net cash. Cash. End of period. Okay. Cash equivalents at the end of the period. Okay. 12. 12 million. Oh no. Against 9 million. So the cash is depleted a little bit. But okay. So if you look at this chart again,
Mm-hmm.
now at least the revenue is increasing, but it's still net loss, right? So but at least around 500,000 they were able to improve the net loss.
Okay.
If you look at it, take a look at the formation of the chart. It's creating a cup. So what? So it means if it's creating a cup, the next one would be a handle for this one. So you just have to wait where the wave of that handle comes down, and that is where you're going to position.
Okay.
So you have the cup, right?
Yeah.
Yeah, and then from the cup, you have to create a handle. So with you try to see where the movement of the handle, and that's where you are going to position on this one.
Okay.
And then check also the revenues from the previous quarter. But so far, it seems that it's improving. And check also if there are reports if they had received a new contract, things like that, this one can improve. So that way, you can actually position your money. You don't need to go back. You don't need to buy and sell very quickly. You can actually position yourself because you know that this particular company is going to turn around, and it seems to be that this company is turning around,
Okay.
and it's being supported by, although the 200,000 volume, yeah, so it's increasing from 100,000 volume to 200,000 shares, so it had doubled its volume, and probably, if other investors would notice that, yeah, if there is a big tendency that it's going to really come back around. And come to think about it, it seems that the EMA is also supporting the move. The bottom of the cup is right. It was sitting right on top of the EMA 200.
Mhm.
And keep searching more, and but at least now you have this one on your back burner, and maybe what you can do, set a trigger on 2350 if it hits the 2350.
Okay. 2350. Okay.
Yeah,
Okay. I'll do that.
perfect. Gotta go because I have to pick up my kids.
Sounds good. I appreciate that. Thank you so much.
You're welcome. Go free. So yeah, keep digging up, and like I said, I want you to go back and forth between Finviz and then the sec.gov, the Edgar report. Be familiar with that one, because if you're able to pull out information coming from this sites
Mm-hmm.
easily and quickly, you'll have a better feel of what you're looking for, and then you'll have more confidence also putting your money in.
Sounds good.
Okay.
Thank you.
You're welcome, and have a good weekend.
You too.
Okay, cheers. Bye bye.
Okay. Bye.